Hey everyone, in this video we're going to be talking about the assumptions. So just like the last one where we talked about principles, accounting also has assumptions that have to be made in order to create financial statements or to read into financial statements. So the first one we're going to talk about is what's called the going concern assumption. And this was probably the most straightforward one, is when we create financial statements or when we read into financial statements, we must assume that our company will go on forever. We're not assuming that we're going to go out of business this year or the next year. So this states that accounting information reflects the assumption that a business will continue operating instead of being closed or sold. So when you're reading this, you can't assume that the people who are creating the financial statements are going to end their business this year. You just have to assume that the numbers that they're showing you will go on forever. Same thing with them creating it. The second one that we're going to talk about, and some of these are pretty straightforward, some of these are this one. This is a monetary unit assumption, and this assumes that all transactions and events can be expressed in monetary units. As opposed to what? Smiles, I don't know, but we can just say that everything we've purchased, all of our business is done in dollars rather than smiles. That's pretty much what that one's talking about with the monetary unit assumption. The next one is the time period assumption. And this assumes that life of the company can be divided into time periods such as months and years, and useful reports can be prepared for those periods. So this pretty much says that the lifespan of my business can be divided up into months and years. As opposed to what? I'm not sure. Smiles maybe again. Who knows? But this is pretty obvious. We're going to do it in years just because that's what we deal with at the time. The fourth one, the final one, is the business entity assumption. And this assumes that a business is accounted for separately from its owner and other business entities. So when you're looking at a business's financial statements, you're not looking at the owner's financial statements as well. You're looking specifically at the business. And so you're only reading the numbers for that business. As an investor, I don't care what the owner does with their money, their own personal money. I care about what the business does with their money. There you go.